Hello, welcome back to Commerce Easy Notes. Today we are going to discuss on process costing. Process costing is prominently used in manufacturing operation, which is divided into different level processed, where the manufacturing concern are mainly using process costing method, where it has separate method for assessing these processes. Definition of processing account include: process costing is the basic costing method which is applicable where goods or services which result from a sequence of continuous or repetitive operation or progress. Costs are encouraged with over units of produce during the period. Therefore, it is very much useful for assessing the standard because next process level is always assessed with the previous as well as the coming forward. The important features of process cost include: manufacturing operation is divided into different processes. Here we are mostly concentrating on manufacturing operations, which is divided into separatable processes. The output of one process becomes the input of the next process. Every process have a separate process account which should be maintained correctly and assessed properly for assigning the cost per unit from that process. And this production will be always continuous in nature. All units of a process are identical. So these are the main features of process accounts. Advantages and disadvantages of process costing. Main advantages include: it is periodic determination of cost, it is simple and cheap, managerial control is almost necessary in all fields, standard process and products are identified. So this kind of process costing helps for making a systematic conditions and availability. Now, disadvantages include: there is no detailed analysis conducting in process costing. It is always recorded in historical cost. The estimates are not always apt for the manufacturing concern always. And it is very difficult to calculate the average cost where more than one type of product is manufactured. In such concern, it might be difficult. The method of process costing are mainly of two types: FIFO method and weighted average method. FIFO is first in first out method, where it follows the principle that materials used should carry the actual experienced cost for a specific unit used. It is more complex, it is more accurate, and it is used where size and cost are large. The weighted average method assumes that all costs, whether from a preceding period or the current one, will be lumped together to assign to the produced unit. It is very simple to calculate and it is used where assigning a specific cost to an individual unit is possible. Process cost. There are so many adjustments related to process cost preparation and formulation. Firstly, we'll see what is process account without a process loss. With an example, a process passes through three distinct processes to completion. 500 units are produced in a month of January 2020. Following information is obtained in respect of the process. Particulars are given: process 1, 2 and 3. There are three processes that the manufacturing concern is going through. Direct materials amounts are given: 4,400, 2,000, 1,600. Direct labor: 3,000, 2,500, 2,000. Now, additional information: the overhead expenses for the period were 1,500. We have known what is overhead expenses. Overhead expenses are the indirect expenses that will be apportioned to this three processes, that is process 1, 2 and 3. All these processes should have a portion of this overhead expenses. The total amounts to 1,500. And it is said that it is apportioned to the processes on the basis of wages. That is, here direct labor are given. On that basis, this direct head expenses will be charged on the ratio, that is 3000 is to 2500 is to 2000. This will be the total will be taken in the denominator, and the numerator will be the process 1 will be taken numerator as 3000. So 3000 is to 2500 is to 2000 will be the ratio of dividing this overhead expenses. We'll see that in a next working note. And there is no work in progress or process stock existed at the beginning or at the end of the month. Now we are asked to prepare the process account. Now, likewise, we have said earlier, the working note for the overhead expenses include a total of the direct labor amounts to 3000 plus 2500 plus 2000, that is of the three labors total 7500. In process 1, it is the amounts to 1500, that is a total of overhead, into 3000, that is the process 1's direct labor, divided by 7500. Likewise, process 2 and 3. We'll see this in the detail in the next slides. Process 1 account, that is a title given in starting, and we'll see what it is divided into two sections, debit and credit. Particulars with the total of it is divided into two, debit and credit side, with particulars and two amount column, one cost per unit and total amount. And we are calculating this for the output 500. That should be written at the right top corner. Output 500 units. And the items include two direct material, that 4400, that is a total amount given in the question for process 1, 4400. This should be made into per unit. Therefore, 4400 divided by 500 amounts to 8.8. Likewise, to direct labor is 3000 divided by 500, 6. To overheads, 1500 is the total overheads. That should be apportioned for process 1. Therefore, it is done according to direct labor. It is given as working note. Therefore, it amounts to 600. 600 divided by 500, 1.2. Therefore, the total of cost per unit is 16 rupees. The total 8000. That will be carried to process 2's as input. Therefore, process 1's output is transferred to process 2's input, that need to be processed again. So, it is carried down to process 2 account, output transferred, cost per unit 16 and rupees 8000 in total. This is how we close the process 1 account. Process 2. At the beginning we write to process 1 account 16, that is the carry forward amount 16 and 8000, and to direct material rupees 4, 2000, and to labor 5 rupees 2500, to direct material 2000 given in the question divided by 500, it amounts to 4. To direct labor 2500 divided by 500, rupees 5. To overhead, it amounts to 1500 into the direct labor of the process 2, 2500 divided by 7000 amounts to 500. 500 divided by 500, rupees 1. The total amounts to cost per unit 26 and the total 13,000. This 13,000 will be transferred to process 3 account. That is the output transferred. Cost per unit 26 and total 13,000. Now we'll see what is process 3. Process 3 amounts to process 2 account carried 26 and 13,000, to direct material 3.2 1600, to direct labor rupees 4 and 2000, to overhead 1500 into 2000 divided by 7500, rupees 0.8, total 400. By finished stock, it amounts to 34 and the total 17,000 by carrying down. So this is what a process account looks like. So there are three process under account, therefore we need to prepare three process account. The final answer is focusing on the finished stock. So after finishing process 1, it amounts to this much, and 2, and then after third process account, the finished goods amount cost per unit rupees 34, and the total cost for 500 units amount to 17,000. That is the final answer. Thank you for watching.